Nothing can stop me. I'm all the way up. All the way up. I'm all the way up.
That's hype every time.
It's great. It gets me going. It's excited. So, welcome to the Money Matrix podcast, where smart money finds a smarter way.
Wow, that's catchy. That's still catchy.
It's every day is catchy. So,
So-
we'll start the standard. Good morning, Vietnam.
Good morning,
I'm Meyer Dalal.
Alan Hastings.
So, this is our weekly roundup,
Yeah,
and we're going to discuss what's going on this whole week, what we've seen, what we've noticed. And the truth, this was a rough week.
yeah.
This was a hard week. We got the shit kicked out of us a little bit, unfortunately.
We, as in the American people,
Yes, as in the American people, the American dream.
not specifically you.
Yes. I mean, look, let's start strong. The tariffs
Yeah.
were increased to 245% on China, and specifically the critical minerals, lithium, cobalt, etc. Big inflation numbers too. Inflation remained high, and everyone's worried that it's going to continue to go higher. Right now, we're at 3.4%, and this is the first time that stagflation has really become
Like an
front
actual
and
issue.
center,
Yeah.
like front and center,
Yeah.
and really wasn't before. Now, Fed Powell actually said it.
Yeah.
Stagflation is real.
And stagflation, to reiterate, is when
negative growth,
negative GDP growth.
yep, high inflation,
Yep.
and high unemployment.
So basically, that inflation is outpacing us now.
Yeah,
Okay.
and they're worried. Like, I mean, right now the inflation is still high, and they were hoping that it's going to come down. Unfortunately, it doesn't look like that. It looks like it's going to start tailing back up if these tariffs are longer term.
Which we hope they're not.
Yes, we hope they're not. GDP, it's slowed down to 1.6%
Okay.
from in Q1 of 2025.
And what does that mean for us?
It means the difference is in 2024, we are at 2.8%
Wow.
growth. So now we're only at 1.6% growth from 1 year ago.
So that's the stagflation you're talking about. We're not growing as fast.
Correct. Unemployment is currently at 4.2%, and it's projected to rise between 4.6 to 5%.
Wow.
So unemployment, inflation going up, GDP coming down.
Okay.
That's stagflation for you right there. Now, this is something that's concerning. Michigan University comes out with a consumer sentiment index. It's hit a record low. It's 50.8%.
And consumer sentiment's just like how your average everyman feels about the economy.
Yes, every man and woman, how they feel, what they think, what their emotion is about about the state of the economy,
Got it.
about their affairs. It's at a 72-year low
Wow.
at 50.8%.
What year was the Great Depression?
72 years ago.
Wow.
I don't know when it was, but either way,
Yeah.
it's concerning.
Yeah, this is historic, is what you're saying.
And credit card debt, highest it's ever been, $1.2, $1.3 trillion. The charge-offs rose to a 13-year high, 4.58%.
Wow.
People are in more debt. They're worried. Things are costing more. They're not making much money.
More unemployment.
Tariffs. It's gloom. It's doom and it's gloom a little bit.
Got it.
Mortgage rates, they spiked. They eased up a little bit. But overall, everyone's optimism of rates coming down in 2025 are really not there.
Yeah.
Fed Powell clearly said they're going to wait and see what happens.
Yeah.
They are not making any moves. Now, meanwhile, the European Union has lowered rates 7 times.
Wow. 7 times.
Yes.
I didn't even know they
Right,
met
yeah.
that frequently.
Yeah. They've lowered rates 7 times. And this is where Trump and Powell are fighting now.
Yeah.
They're in a real big situation. Look, I kind of agree that Powell is late and slow to react on the uptake. Even when times were good,
Right.
he was too slow in making the changes to prevent the inflation that we had and the problems that we had. But overall, when you have government entities, the president fighting with the Fed chair, it doesn't look good. Now, the affordability crisis, ready for this? 25% of households cannot afford the median priced home to
Wow.
purchase it.
That's insane.
Monthly payments on $100,000 loan are up $664 a month.
Wow. That's unbelievable. That's a lot of percentage. That's not even.
$664 is a lot.
Yeah.
And the median home price is somewhere around $400,000.
Yeah.
So you have also some housing stuff going on. You have certain areas that are hit with huge inventory problems.
Mhm.
And so it's becoming more of a renter's market,
Interesting.
so people aren't as excited about owning a home. You can own a home. You can rent a home cheaper right now than you could to buy a home.
I was going to ask you, is renter's market could mean a couple of things. Is it in this case that homeownership's just too expensive, or is rent coming down? Is it?
It's a combination of both. Rents
it.
are coming down.
Got it.
Homeownership is expensive, and people are unsure about what's going on.
They're not willing to put up all that money for a purchase or whatever
Correct.
in
They
uncertain
just
times.
don't know what's happening.
Okay.
So some key takeaways from this really is this is worst case scenario. Everything is really a projection. The consumer sentiment is based on now because it's an immediate gut punch.
Right.
When you see everything and everything is doom and gloom and everything looks like, what's that Independence Day where everything is blowing up and everything?
Exactly.
That's real.
Yeah.
But we don't know what any of this is. We don't know if it's a negotiation, it's posturing, it's a combination thereof, what the actual result of it will be.
And I think Fed Chairman Powell, he said that in his speech. He goes, these tariffs are unprecedented. We don't have a model, and nobody has a model
Correct.
to understand what to expect.
But if you think about it, when Trump first brought out the tariffs, he said, this is it. I'm not negotiating. I'm not doing anything. They're here.
Right.
And then that was April 2nd. A couple days later, things changed. People came to the table. And then he said, okay, you know what? I'm going to pull everything off. Just keep it 10%
90
and
day
give
pause.
us 90-day policy.
Yeah.
So he saw the turmoil. He saw the freak out. And what happened? He pulled off the gas a little
Thank
bit.
God.
So the silver lining here for everybody, nobody knows. This is worst case scenario, doom and gloom. And you know what? The truth, that's what sells. That's what's exciting. When people see all this negativity, that's what creates headlines. That's what all the news companies, that's all they put out.
They feed on that.
They feed on that. And so does the average person, because unfortunately, when you see negative, it's hard to realize that this is all a scenario. This is a what if.
Yeah.
All of this could change tomorrow. And you could say, all right, China made a deal. Everyone made a deal. It's going back to normal. And this will be a temporary blur because it's not prolonged.
Yeah. I have a couple, first thing, you're right. Bad news always sells. That's why all the news is always, car crash, markets crash, terrible thing, whatever. But I think the biggest problem in the whole scenario is, like you just said, he sends out the tariffs. He goes, this is my policy that will never change. And they try to plan for that, and then it changes 2 days later, right? And at first it was, all right, Mexico and Canada has to stop drugs. And they pledged to stop drugs. He's like, well, let's stop immigration. So they pledged to stop immigration. Well, now our trade deals are unfair. And it's never consistent. And that's the problem that I think we saw in the markets, is this up, down, and no one knows what to do because they don't know who to trust or who to believe. But you're right. The silver lining is, at least when the markets reacted that badly, he pulled the plug, right? Or temporarily pulled the plug. And I think that at least there was a reaction from the administration where it wasn't just like, all right, you're on your own. You know?
I mean, when you see stock markets and trillions of dollars of valuation being wiped out,
right.
You're going to have to look at it. It's not something you can turn a blind eye to.
Yeah.
I mean, NASDAQ is pummeled. The Magnificent Seven pummeled. The Dow, the S&P. So there is a sense of, hey, wait a minute. Let's see what happens. Let's see how this thing goes.
Yeah.
In my opinion, I think it's not going to be a prolonged thing. I think you're going to see this all come to a head, and I don't think you're going to go 90 days.
What do you think is say it all goes back to normal. Say tomorrow he says, you know what, tariffs were a great experiment. I don't like how they turned out. We're gonna stop the project. Back to day one, right? If he does that, what are the repercussions of what has already happened?
I mean, no one really fully knows what the true essence of what happened is, because you had a lot of people. I mean, look at the consumer spending numbers came out. They were blown away because everyone ran to jump to buy stuff pre-tariff.
Right.
Right. So you don't really know what it is. The unemployment numbers, where everyone thought, oh my God, Doge is cutting all these people, everything's cutting. They came out better than expected. So no one really knows for sure the severity of what's happening. But we do know is a lot of it is emotional based. Yes, there will be some backlash, if you will. But I think the overall sentiment is, hey, once this gets resolved, we'll be okay. And I understand why President Trump wants the interest rates lower, because it fuels money back into the economy, it fuels business, it fuels everything. I mean, this year was supposed to be the year of the IPO, initial public offerings in the stock market. You had a lot of companies over the last, from 2021 to date, sideline their IPOs because they did not want to come into a market with uncertainty the way it was before.
And they were expecting this to be the opportune moment.
2025 was supposed to be the year. Trump was supposed to come in and make everything better, make it less red tape, make it easier for public companies to come public. The economy was supposed to be booming. Interest rates were supposed to come down. It was supposed to be a much favorable environment. Unfortunately, I think it's going to get delayed a little bit. I think third and fourth quarter is really going to be telling.
26 is our year.
No, I think it's going to be sooner. I mean, right now the stats saying they're still expecting a rate cut in June.
Wow.
It still shows over 50% as the stats come in to go, showing the rate cut.
Yeah.
Are the rates going to come down? Yes. When is really the question.
Yeah. I think one of the things you brought up too about the ECB, European Central Bank's lowering interest rates 7 times. Their statement on it was, we know this is bad for inflation, but our economies need the help, right? Yeah. And I think that that's to your point where, we need a win. I think it's important that most of the market, I mean, you saw it this week. What was it? A tweet caused millions and trillions of dollars to evaporate. Sure. We're in an emotional market. And especially in times like this, when we don't have precedents, it's all about emotions. So in a market where you can see that much money in and out daily, having the Fed come on and give assurance or say, hey, interest rates are coming down, and incentivizing people to jump into the market, maybe that positivity will outweigh some of the negativity from different factors.
For sure. I mean, look, the reality is rates at 2, 3, 4, 5%, unreasonable. It should have never happened. It'll never happen again, in my opinion.
Yeah.
I can't say for sure certainty, but something that's never should have happened. It did. It was great. It was great times for everyone. The reality is 5, 6, 7% were normal. That was normal for a very long period of time.
Yeah.
So I think rates are going to normalize somewhere around 5.5, maybe 5.75, something like that. That's where I think it's going to normalize. And that's okay.
Yeah.
Coupled with everything else good that's going on, you're going to be back in a stellar market.
Of course, I think affordability too, when that number comes back in line, if that ties into those lower interest rates, I mean, it's going to be a heyday.
Of course. I mean, people have the ability to see and qualifying now for mortgages harder than ever.
Yeah.
Prices are up, uncertainty. You don't know what's happening. There are opportunities. There are, alt doc lenders, like we do the non-QM loans.
Sure.
Help you qualify easier. And still, there are good things happening.
I agree.
That's the message.
I agree.
That's the message.
Yeah.
So that's our weekly roundup. And then we have a file of the week that was standout.
Oh, our
that
Friday
was
funding.
Our Friday funding.
Yes.
So we had an interesting file. We had a client who was looking to cash out of their home, needed over $1 million, $1.2 million, something like that.
Right.
Had a couple of challenges. The biggest challenge was their credit score was low.
What was it?
It was below 680. And especially when you're starting to get into $2, $3, $4 million loans,
Yeah, the higher risk levels.
you have the higher risk levels, and the credit scores being so low tend to be a challenge.
Yeah.
I mean, he had some compensating factors, but overall, just looking at that, cashing out and leveraging yourself over $1 million, we made an exception. We made it work. It was definitely a challenge
Sure.
to understand, put it together, to get the, the underwriting to see, hey,
It's worth it to give this guy $1 million.
correct. There's worth it to give him over $1 million. There's compensating factors here. We have the ability to pay. We see the trend in the business.
So it was a business bank statement loan?
Correct. It was a
got it.
business bank statement loan. So there's makes sense underwriting exists.
Right. Was it?
That's real.
Yeah, and I think, every loan is a combination of factors, and ultimately the weight of those factors can change, right? The credit is important. Your credit's incredibly important. But the fact that you can pay your loan should outweigh, in some cases,
Exactly.
a number.
I mean, if you look at it, a loan is made up of credit,
Mhm.
your income, your assets, and the property, the collateral. So it's like a scale.
Yeah.
If one is low, the other 2 or 3 should balance it out. But if you're completely lopsided, you're not going to make that deal. And that's where the art of the deal of art of the deal, Donald Trump.
Yes, right.
But really, it's understanding what the deal is,
Yeah.
how to make a deal, what's involved, what do you look at, and underwriters are, ours at least, are trained to understand business, entrepreneurial, cash flow analysis, understanding how businesses work, because that's what we look at all day long.
Right.
Where not everyone is equipped for that. Not everyone understands that. It's hard.
Do you think he walks away with over $1 million anywhere else?
With that score, no.
Right.
I really don't.
That-
I think that he'd be hard pressed. He'd probably be limited to about $500,000.
Oh, I'm proud to be a part of that too, because I think that that's something we can hang our hat on, helping people get these things done when it makes sense.
Yeah, absolutely.
And I think coming up next week, I'm going to put this up on the screen too, so that we don't lose this. The economic calendar. I think it's important that everybody stays aware of, who's speaking when, what numbers are coming out when. Did you have a highlight of next week, like what days to look out for?
Yeah, so I think that new home sales on Wednesday,
The new home sales.
yeah, is something to look at, because that's an indication of new builds, how the consumer is reacting to what's going on.
Is this just to clarify? These are March numbers, right? So it'll still be
Correct. It's
Last month.
Yeah, it's last month.
Got it.
It's last month.
And that's Wednesday, Thursday.
And then the jobless claims you have on Thursday. Also, that's going to be interesting to see. That's for the week of April 19th.
Yeah.
So it's going to be interesting to see, are the Doge numbers coming into play? What's happening with that? So far last week, we didn't see, it was actually less than expected.
Right.
So far, none of that has really come into play.
I think Friday we have our consumer sentiment.
Yeah, Friday, we have our consumer sentiment.
How much does that really affect the market, do you think?
Listen, it doesn't affect it to a point where it's going to move markets unless it's a huge downward, downward
Sure.
from where the estimate is. But it's estimated to be 50.8. And if I remember correctly, the last one we had was 50. Yeah, also 50, it's right around the same, 50.8. So,
That's the low figure, right?
Yeah.
That's like historically low.
yeah, it's 72-year low. So if it comes in beneath significantly, it might move markets. We might see what's happening.
Got it.
But anyways,
Yeah. Listen,
we had a great week.
yeah, it was fantastic. Is there anything positive we can go out on? Like, is there something good?
Yes. I'm going to say what really is optimistic and hopeful and looks good. This is worst case scenario.
Right.
The economy, the stock market, tariffs, everything that's happening, all these numbers are based on the worst possible case scenario. So anything comes short, it's a home run.
Yeah.
You know, it's a home run. And more importantly, there's always opportunity.
100% agreed. We're still closing deals.
We're still closing deals. There's still deals out there. And more importantly, people still are enjoying their life. No matter what, be happy, enjoy, do your best, work hard, and everything else will come too.
I love that. The future is bright.
Patrick Bet David, future is bright.
Thank you.
Thank you.
Nothing can stop me. I'm all the way up. All the way up.